This is all we're going to be breaking down. So we kind of came into this a little bit last class, but just key levels. We're going to talk about how to get them, how to draw them. Y'all probably know this like the back. Some of y'all know this a lot really well. Structure. So key levels is where I'm going to take a trades. Structure for me, and I'm kind of going to start a lot of y'all off by just following the overall structure and sentiment of the market. But that for me is a big thing that will determine my A plus, A minus setups and really determine the size I have when it comes to making positions. We'll talk about sizing also. And volume by price. Again, I need that to confirm my entry, then order flow for the entry triggers, and that's pretty much all it is. It's super, super simple, right? There's nothing crazy really going on. So key levels for me, I have to break this down again because of consistency and defining my data, like supply and demand. That's it. Like if I'm not in these zones, I don't want to take a trade, right? Um, liquidity, right? The big thing as well, that super easy trigger that I know a lot of y'all really, really like. And sometimes, these liquidity sweeps will play out. Sometimes you only see one of them a week. Sometimes you'll see five of them a week, right? But it doesn't matter how often you see them. Sometimes you'll see like two or three times a month, right? But like if you really think about it, if this is the only play you go for and you only take two, three trades a month versus chasing like 10 different trades, you'll probably end up way more profitable if you only took those two, three setups a month versus, chasing 20 trades that didn't involve the setup, which is why some of y'all have been talking to like three or four have, when I look at your trades, I'm like, okay, well, when you take the actual setups you should be taking, like you're making money. And then you lose all of it taking setups you shouldn't be taking. So if you were just to take those three, four setups that 1 month, you would be really green, right? You'd be passing a challenge super close to a payout. And which is a big issue, which is why, like, when I'm going over all my setups, but like I can take all of these, and I do take all of these because I've been doing it for so long. I can look at all these things at once, and I know what I'm doing, and I know what to look for. Like if you haven't been doing this for so long, you're not going to be looking at 20 different things at once. It's going to drive you crazy. And it's going to make it kind of impossible. So the hardest thing is like we're going to give you 1 to 3 setups max, and like this is all you're going to trade, right? And once you get really good at these, we can add some more things in there. But the hard part is just sticking to those setups and not doing anything else. And a lot of it kind of when it comes to tracking, we're going to track the setups you take individually versus the setups you kind of take with me. There's like a couple of y'all that probably aren't even in this class that should be going on your own here next time we speak, hopefully sometime soon to kind of get your psychological rules in place. But when it comes to these key levels, make sure we're being recorded. Yeah. We're only playing supply and demand, right? And the reason I like supply and demand, we talked about this kind of in the theory class, is really where we see aggressive moves up and down. Like to make these moves up and down, it just takes a lot of money to even like a 10-point move. It takes millions and millions of dollars to make. So the consolidation before these levels is where we can kind of find this abnormal activity in the tape and kind of make our position. So if I have my data of only taking plays at supply and demand, it just becomes very consistent for me, right? And some people have it, only taking plays at VWAP. So they know what the data is every single time it comes to VWAP, how accurate their setup is. For me, it's supply and demand, and it works really, really well because you can kind of see just by looking at these zones, like don't even think about anything else. Just look at supply and demand, so we kind of see how often they're respected, how often they break and retest, and like it's just it works out really, really well. Now the difference is kind of knowing what to do once we get in these zones and how to really place your stop loss or your invalidation once we get in the zones is super, super important. But we're gonna go over how to draw them and how I like to draw them. So depending on kind of how the structure of the market is kind of looking, the higher the time frame, the zone, the stronger it will be. Like the more respected it will be, and the more aggressive it will break if it does break, right? So these are all the time frames I really look for my zones at: 4 hour, 2 hour, 1 hour, 30 minute. I'll talk about why the 15 minute I barely use, but let's talk about that in a second. So I start on the 4 hour, and I'll work all the way down to the 30 minute to make them a smaller, or just there's some zones in the 4 hour, not in the 30 minute, some zones in the 30 minute, not in the 4 hour. So just to look at every single time frame, make sure that we know what's going on. So kind of to break down what I really would need and classify as a big move, especially in the higher time frame, right? We're either looking for one massive candle or just, a bunch of just candles back to back to back, like over 20 points in ES, 40 points in NQ. Usually it'll be way, way over that. We'll talk about the 15-minute zones. So it's a little bit of a outlier there, but the bigger the move, the stronger it is. It could be during FOMC, whatever. That just doesn't matter. The bigger the move, the stronger the zone will be, and the more expected it will be. But if you don't go for like one big candle like this, it doesn't actually reach that 20 and 40 rule that I have. Like 2 to 3 candles that kind of have that equal that just straight up, straight down. Like you'll be able to easily tell, right, if the move down or move up is aggressive or not, just by going based off of that. But for supply, we're gonna start on the 4 hour. So you can tell this is what it looks in the 4 hour. Then when we get down to the 30 minute, see how smaller it gets. So give ourselves less room for error here. So we're just going to identify consolidation or one neutral candle. So it could either be a neutral candle or it could be consolidation. Neutral consolidation could be either or, and y'all know how to draw this, right? Obviously, consolidation will just be equal highs or just equal lows if it's the other way around, obviously. But the top of the zone for supply is going to be the wick, and the bottom of the zone is going to be the body. This is how I've always drawn zones. A lot of people draw them differently. This is what I found out works best for me, and really what all the data I have comes from is from drawing the zones exactly like this, right? So right here, a quick example. Obviously, there's actually two zones here, right? First of all, we get this consolidation. So I'm using the bottom body of the consolidation. Actually, we can expand that down a little bit more. I think it kind of moved in the top wick. Then this right here, I could take a trade inside that. But there's also a zone right here, right, from this neutral candle, because you 1, 2, 3 big candles coming down. I would also be okay with taking the play. Demand is going to be the same thing, but backwards, right? Starting the 4 hour, it could either be consolidation, where we're getting the top of the body, bottom wick, right? It could be one neutral candle here, top of the body, but down bottom of the wick, consolidation. It could be either or, right? This is a nice test right there. But again, the bottom for the demand will be the wick and the top will be the body. So it's just opposite. And I just started the 4 hour and work all the way down to 30-minute time frame. Now, obviously right here, we see a very, very nice. So this right here, sometimes it would look like, is this consolidation? Is this a one neutral candle? For this, actually, these squares are kind of off, but I would just take, so disregard this box, actually, it's wrong. I would just take the top body and then the bottom wick of this candle here. For consolidation, I don't know why that's not on the slide. You want at least 3 candles. It wouldn't make a significant difference, right? It wouldn't change too much because, like, let's say we just come back here and we wick this and we come back up, you would still count it. So this wouldn't make a huge difference, but to be kind of spot on, we would only take this one neutral candle since there's not 3 candles kind of following that are the same. And when you're looking for consolidation, you really want equal highs and equal lows. So like, 1 to 2 point difference on ES, like 5 point difference on NQ is really what we want to look for here. The 15-minute zones, why I rarely play them. So if we have kind of like an FOMC type of drop where we just one sporadic huge candle down in a 30-minute time frame, like for like 100, 200 point range, you see nothing and it's just a straight candle on the 30-minute, then I will go down to the 15-minute chart and see if I find any levels. So if it kind of just looks like huge like this, and there's like a 200 point, range between the top and bottom, and I see nothing, I'll jump into the 15-minute and then I'll use these kind of zones in the 15 minutes so I can kind of get something going on, because a neutral candle consolidation in the 15-minute after like a huge move down like this usually is a pretty good retest level. Some people like just call them fair value gaps, whatever it is. Like a lot of times they'll match up with like the Fibonacci retracement. For me, that's the data I have for these that I really, really enjoy and have been using. But that's the only time I'll use a 15-minute, like 100, 200 point range. And I move down or up, and there's nothing in between on a 30-minute, we'll jump down to the 15-minute. So it's pretty easy at that point. So that's pretty much it on the supply. Like this is like very simple. Like this is only like level I'll take a trade. That defines consistency for me of where I'm getting in and out. That's all I need for that, right? Now the next thing I need, we're gonna break everything down here. It's just market structure. So this is important for me when determining my bias and determining my size. And when it comes to actually you guys, a lot of you guys, I'm only going to have you play with the structure and with the sentiment, longer time frame, and that's it. Because a lot of y'all don't have control of size. A lot of y'all are on prop firms, and you really only want to be taking those high probability setups. So you only focus on this. Like the biggest issue most of y'all will have is not taking a trade, right? The biggest issue a lot of y'all will have is sitting there, like not seeing opportunity that day, just because you're looking for an A+ setup and then not taking that trade. And that will be much harder than learning everything I'm going to teach you here today. But how are we going to classify this? And again, this has to be pretty consistent because of the data I have and I'm going to get. It's for the same thing. It's for the same shit. Like nothing's going to change. Like I need to see this exactly this number. And if it's not that number, like the data I have for it won't make sense. And the data is always changing, but it's been pretty consistent for a very, very long time. And that's why I kind of like to break it down, the win rates per entry trigger, and not only that, but per kind of if I'm going with the overall sentiment or against it. But for the 4 hour time frame, that's how I'll identify, the sentiment of the market or the trend of the market for me. So uptrend, you have at least 3 higher highs and 2 higher lows. And we'll talk about structure shifts in a while, kind of how you can avoid doing anything wrong into them. But every single time, Google Sheet. Yeah, everybody, y'all get free access to Master Tracker. I'm not sure why it's asking you all to pay for it. I'll show you how to get free access to it after that. But I would prefer y'all. You don't have to use that. If you already have TradeZella, you can add me as a mentor. If you're using your Excel, you can keep using that. But I do also have access to that tracker sheet. Y'all get free access to, so I'll be able to see everything, and it just makes it easier for me. But if you have TradeZella as well, you can just add me as a mentor. Who would do setting up a Google sheet? Yeah. So if you want to use that tracker, you can go ahead. You can go ahead. It's pretty simple to use. It's pretty simple to use. And it's nothing crazy. You can just kind of, set tags for the setup and what entry trigger you're using. set the tags, and then you can just add notes. Yeah, I recommend you add notes for every trade, kind of, put in your daily plan, your daily journal, and then add your notes for your trades as it goes into the trade. And not only kind of like the notes, what the tracking should be simple, like entry, exit, where you're supposed to be and where you're supposed to get out, what setup it was, what was the, sentiment, what was the structure, what you saw. And then the notes, you actually kind of journal your daily plan, what happened after you follow your daily plan, and your thought process behind everything. We'll go over that like the last class, how I track. It's really, really pretty simple, though, but I do go pretty in depth on all my tracking just because when I come back and review, import and click it based on the setup. Yeah, yeah. So yeah, you can import on the tracker one too if you want to use it. It's free, the master track one I'm going to give to you guys, but TradeZella I definitely think is much better if you want to pay for it. It has a lot more resources than the Master Tracker one does, and it's a little because you can get like you play the candlesticks on there. It's definitely better, but you can import and export and connect your broker to the tracker one as well for just fast importations of trades. But yeah, TradeZilla is awesome. It really is awesome. What was I going to say here? So again, this has to be pretty. Let me even open it everything. Yeah, I put the wrong link. So you have to put in the www before. So if you put www before that link, it'll open up. Not sure why it's like that, but it's like that. Again, consistent. Yeah. Or you don't have to screen record it. You can just go back and look at the data, correct? Because that's why I'm so that's why when I track and journal everything, I'm so detailed because when I go back and review, there's no way in hell I'm gonna remember everything that I thought about or that I saw that day. So the more I kind of put down and the more I kind of write down when I'm going back and reviewing, I kind of understand exactly where my head was at. Because if I don't, I'm not going to remember anything. Like there's no way in hell I'll remember every single trade I took, every single setup, every single one of my plans, my thought process. So what you mean is after you get in a trade is what you're saying? Is that what y'all are saying? So after you hop in the trade? Yeah, so that's totally fine. After you hop in the trade, like I mean, a lot of y'all will probably benefit walking away anyways. After you hop in a trade, like everything else is going to be noise. Like it doesn't matter. Like you're in a trade, you have your stop loss, you have your take profit. Everything else is noise. Y'all shouldn't really be micromanaging your trade at this point at all. So that's honestly totally fine. You don't have to see what is important is what you saw before the trade and what made you take the trade. And as long as you know you have a valid reasoning for getting out at your level or your stop loss level, you have a valid take profit level, that's it. But as long as you jot down everything before, and then a lot of y'all will probably benefit greatly from walking away anyway, so that's good. So that's good. Yeah, so don't worry too much about that. Yeah. A lot of, I mean, that's what helped me a lot in the beginning was literally walking away because I was having such a huge issue for me. My issue wasn't really like revenge trading that much, wasn't really over leveraging or something. It was getting out too early. I would get out at profits. I would see money and I would just get out because I'd be scared to lose it. That's the thing is I hate it, dude. It's incredibly fucking boring, especially those days where you take like 20 plus trades, when you're over trading and you're picking it up, you have to journal all that shit down. Like that is what will make you profitable though. It's the boring shit. It's the shit nobody wants to do. I don't want to do that shit. I hate it. I don't like writing shit down. It's very, very boring, extremely boring. But I know the second I stop doing that is the second I'll stop kind of having confidence. And whenever I stop having confidence, it's just that's why I like to size now when I'm unconfident. Is the second shit starts to go and hit the wall, hit the fan, and I start to. And the thing is, for me, like it's work. Work isn't fun in a sense, and it's important because it's money. So like if it wasn't like money involved in that grand scheme of things, if it wasn't like a business aspect, like so if you own a business, right? I'm not sure how many of y'all here own businesses or anything like that. Like there's a lot of boring shit you have to do to kind of maintain that business and make sure you're still making money. And it's the same thing here. Like if trading wasn't boring or wasn't and if you are bored while you're doing this shit, good because it shouldn't be fun all the time. It is honestly not really fun most of the time, which is why I kind of enjoy going live and doing all those things because it's really boring and it's especially when you sit there for hours and you don't take a setup because nothing presents itself, or when you take a bunch of trades a day and you have to like spend an hour tracking and reviewing and journaling all those trades. It sucks and it's very boring and you can expect it to be boring. It's totally normal. So don't think it's not going to be boring. And you don't even have to learn to journal. It's not like a hard thing to do. Like you know exactly what you have to write down. You know exactly like just write down everything. Everything. Like if you don't know what you're journaling or you have to journal, just start writing down everything that's going on in your head before you take the trade and while you're in the trade. And if it honestly helps, yeah, just walk away. That's what helped me significantly, especially if you're having issues taking out getting out too early, which I had huge issues with. And that's what boosted my confidence was I would walk away. And then I did that. I promised myself to do that for a whole month, just walking away. And that was the most profitable month I had, just because I was, I wasn't letting myself go into like I would see $100 in profit like in like 5 seconds. I'd be like, damn, this is like for me back then, like it was significant, and I would get out. But every time I would lose, right, it would be like $200, right? Because I was letting it go to my stop loss, but I wasn't letting it go to my take profit. That skewed up obviously everything if you have a negative R&R, but for me it helped walking away. Yeah. Having those rules is key. So, I mean, a lot of the times people know what they have to do. They just choose not to do it. Choose not to do it. It's hard. It really is hard. The bear market is going to be the same thing, just backwards, obviously. So to classify this, to make sure the data is consistent for you guys and for me, 3 lower lows, 2 lower highs, bear market. So for A plus, that is be short of supply and break retest of demand. And this for you, not going to be A minus or A plus. This is going to be the only, for most of y'all, the only trades with sentiment that you're going to take when we're following, when you're making your plan, right? Just A plus setup. So we're not even going to go for A minus. Market's bullish. This is all you're going to look for. Market's bearish. That's all you're going to look for. In a balanced market, I like to play 4 hour, 3 equal highs, 3 equal lows. I like to play the top and bottom. I don't like for balanced markets. It gets to really A minus if you're playing in between and you're not going with it. So like let's say, and even then, man, playing in between the balance ranges is not really a smart thing to do. And that's why when I play breaks, I don't like to play the break. I like to see it actually give me a retest first. But this is what you need to classify as a balance market. 3 equal highs, 3 equal lows. Super simple. This is why we're going with the structure. Best data I have for this actually makes the win rate significantly higher is just find the 4 hour structure, find the 30-minute structure, and we look for our key levels and we fade them. So we want to fade a 30-minute structure to the 4 hour. This is something a lot of traders like to do, just with different setups. Obviously, maybe not supply and demand all the time, but a lot of traders do this because it works out really, really well. The overall longer term trend really is the strongest market sentiment reading, I guess you could get. So what I mean by that, if the 4 hour is bearish, we're finding our supply levels and looking for a 30-minute uptrend into supply to short. That will give you the best probability of an A plus setup. Same thing backwards, right? If the 4 hour chart is bullish, you're looking for if you draw on your demand levels and you're looking for a on the 4 hour, whatever you want to do. I think it was like around right here on this example. You want to look for a downtrend into your demand levels to go long. Very simple, right? Nothing crazy going on here. And when I'm going against the structure, again, most of y'all probably shouldn't be doing this. I go down to the 5 minute and then I wait for the shift to happen first, because if the market's super bullish and we're coming up into supply and the 5 minute chart is super bullish and we're just going to supply, it doesn't really make sense for you to try to catch the top like that. Which is why if you are going against the structure, most of the time, you'll see me do this. I like to wait for the market to give me a shift first in the 5 minute, right? Create those lower lows, have an aggressive sell off first, and then come in and give me a lower high. So for this example, the market is super bullish. Wait for the shift to happen, get in after the shift, get in after the new low, get in after the lower high, and then you can get in. And sometimes it'll just bounce without you. Like, great, you don't have data for that, so just don't take the trade. Sometimes it'll just zoom right past your zone. Like, a lot of people say like a lot of people just think, it's cherry picking, but you have to really cherry pick. That's like when you're going for these setups, especially if you don't have much size to work with, if you're doing prop firm accounts. You don't like sometimes the FOMO is big. Sometimes we'll just hit the zone and you don't take it because the overall structure is super bullish and just flies down without you. You might see an entry trigger. You don't have the data for that. You don't want to take that setup. You have the data for it giving you a structure shift, and then you take it. So if that happens, you shouldn't be upset you missed the trade. You followed your plan and that's it. You have to do that same thing over and over again. Yeah, especially at all-time high. I don't know why everybody has this issue when we're at all-time highs. It's just like, oh, we're so high. We have to sell off. We have to sell off. It just never ends up happening. And I don't know, it took me doing that like 10 times. I swear I did it like 10 times when I started. And I would just piss myself off. Every time I tell myself, like, it's not going to sell off. Right? Then when we get to all-time highs, I'll see consolidation with like massive absorption from buyers. I'm like, okay, this has to sell off now. And it just doesn't. All-time highs are something I never really look to short ever, literally ever. It's such a bad choice. Bad choice. Yeah. It's just like it will never work out most of the time. It works out that one time, but it doesn't matter if you catch it that one time if you fail doing it 20 times. The market sessions, we're about to talk the liquidity levels. So I honestly really look at the London and New York highs and lows for liquidity. Because obviously the London and New York will run into Sydney and Tokyo and all the other sessions anyway. So, and the sessions affect the instruments you trade. So when we're doing our one-on-ones, and some of y'all that can't trade the New York Open or time where there's a lot of liquidity or volume for the New York session, there's other sessions we'll talk to you about, and there's other things you can trade that work really well with this strategy. Gold is one of them. Gold is awesome. If like I was trading like the overnight or Asia, I would probably be looking at gold or some commodities a lot. But so for liquidity, this is huge. A lot of traders use this. and just in different setups as well. But it's a really, really good thing to understand how and why the market moves. But session lows and highs, I look at the London Open or London Asian, New York Open, New York close. London Asian usually overlap. New York Open and close usually overlap as well. And equal highs and equal lows, something I also use for liquidity. I need at least two. And you'll see what I mean by that. I go over some examples, but the way Thinkorswim has it, I have these gray areas and black areas, so it makes it easy for me to mark out my levels. I go to the gray area, I get that low in there. I go to the black area, I get that high. And obviously, if it sweeps it, it's not a liquidity level anymore. So this is not a level because this is a level, right? And then like this is not a level because this is a level, and these aren't equal highs. And then, as you can tell, this is a good example of when New York and open and close don't overlap. This is the close high, right? And this is the open high. And now for the low, it does overlap because it kind of comes in close. This is the low for the close and the open. So you can kind of tell next day open, we sweep the New York close. Liquidity fell back down, came back in here. We sweep the low, came back up. So just by looking, I would suggest you just look at the chart and just watch these levels in the 15-minute, 5-minute, even kind of higher time frame if you want, just to see what happens, right? And we're not always going to sweep and kind of just fly or just, it's not that perfect or that easy, right? But a lot of times it happens. If you can kind of combine this with reading volume and combine this with like looking at the footprint chart as we sweep, combine these with your supply and demand levels, it can become stronger and stronger the more confluence as you add. Equal highs and lows are also super strong, right? I mean, as you could tell, like this is a super strong set level, but we just tapped once, tapped twice, tapped three times. The more times we tap, the stronger liquid level is, and then we actually swept it, market flies down. So super simple thing to do. And these are going to come clutch. Like you just don't worry about how you're going to use these for setups or anything that we talked about today to setups. We'll build the setups next class. Just worry about understanding what this is, how to draw them, how to find them, and how to read what's going on and after it happens. Then we'll build the setups coming in afterwards. But this sweep is one of the easiest setups we have actually in our book and has an over 50% win rate. So it's anything with over 50% is great, in my opinion. You only risk a 2 to 1 every time, you're good to go. Especially with those prop firm accounts. I have a whole section with these prop firm accounts that just because you're not really trading like you would trade a personal account, a little different. And setups like these give you a pretty easy way to get about those accounts, especially with the trailing drawdown. Like a lot of people that trade Apex, access the slides after the trading. Yeah, I'll post the download. So not the download, the file, I guess, the chat, but a lot of people who want to trade, especially with Apex or anything with just trailing drawdown, there is a setup. I'm going to teach you guys on a setup. It's just a trailing stop loss way to manage your risk that I'm going to show you guys if you're having issues with the trailing drawdown. It's just a way to trail your stop loss so you don't get destroyed. You don't get like your TP's at 10 points, you don't go 9 points in profit for it to hit your stop loss and your drawdown's messed up, which is, we're not trading for real at that point. I wouldn't recommend you do it in a real account, but when it comes to trailing drawdowns, accounts like Apex and like go for it. Volume profiles next. So we kind of talked about the key levels, supply and demand and liquidity, talked about market structure, how we're going to, determine if we're actually going to be taking a trade or not off supply and demand. Now, one more thing that I need to have confidence, right? So it has to be, let's say we're only going for A+ setups, right? Only has to be in supply and demand, has to be with the overall structure, and then the volume by price analysis has to agree with our buy. So we'll talk about what that means in a second, but volume profile, I'll go over the tools to read a volume first. We have, I love the volume profile, man. It's a great tool for analysis, especially like your pre-market analysis. You can even use this to have like volume by price analysis for your entries if you want to. For me, it's not the prettiest and it's not the easiest to read, but you can if you want to. So it's daily, every single day, you'll get the volume profile for the day, right? The gray histogram right here, this little grayed out thing you're seeing gives you the price, the volume. It's like kind of like the footprint charts in a sense, but it gives you the exact volume per tick and price of that day. So let's say this price, this line right here is at 600, right? Price. This was where the most volume was. Right here, you can tell there's a spike. Right here, the volume was dead. Right here, the volume's dead. You can kind of tell the volume was dead up here, so price reversed. It's a great tool to just read volume. It just gives you a really nice representation of volume. The blue area will be the valued area, and this is where the price was traded at the most amount of transactions. The yellow line, I liked a lot, is the point of control. And these point of controls act as some really good support and resistance, really good at building levels as well. I'll show you what I mean. And just really good for just reading bias, right? For like your pre-market plan as well. Used to strengthen your bias, like especially when you're going for when the structure is about to shift, right? When we're in a very clear bullish structure, but now we have like 2 higher highs, 2 higher lows, and you don't know if we're about to shift or not, this will help out a lot. Like if you just see clear gaps in the volume profile every single day, and then, this happens, right? You can expect a little bit of a shift. But this is just showing very strong. It just adds to the confluence of a bear market when you see the volume gap down like this every single day. And trend, like you can just sometimes like to remove just the candles and look at the trend of the volume profile. Like see every single day we have more and more volume to the upside. Every single day we have more and more volume to the downside. Just kind of get your sentiment, get your bias, right? A choppy consolidation market, you identify very, very key price levels by having the point of control. They have very, very similar locations. And the point of control, a lot of people think it's like just a price level, but it's not a price level. It's a zone. Sometimes it's wider than other times. It's not just a specific price level. It's a zone. Which is why when I have those lines marked out, like it can swing past it a couple points, or I can be beneath it a couple points. It's a zone. And then the point of control, so the version point of control is just an untouched line. And I have a lot of data for this. You just look at this past week, these past like 2, 3 weeks of VPOCs. Like just look at them. And sometimes I get annoyed by them because they don't hit when I'm trading, and I just get annoyed, but because they usually end up working really, really well. But I have a lot of data for these VPOCs, and they're super, super, super strong, especially if they're in supply and demand, which a lot of times they are. And it's as simple as it can get. You have a point of control, the day closes, it's untouched, and then if it kind of comes back in and touches the next day, previous day, or the next week, the next month, the next 3 months, there's awesome support and resistance there. And almost every single time you will get some sort of resistance there, whether it be like a 10-point sell-off or a 50-point sell-off, you'll get something from it, right? Almost every single time. Like it's a significantly higher win rate. And every single setup I had that has a VPOC in there is increasing the win rate significantly. I'll actually show y'all. For a lot of them, it goes over 10% because it doesn't happen so often. I have setups that chill with like a 50, 60% accuracy. But if you split the data I have and track the individual data of VPOCs, and then I could just filter the ones with VPOCs to see the win rate, how much it increases the VPOC in there. And a lot of them, it significantly increases the win rate by like over 10%, which is why like when I see that, you can size up. You can size up significantly. But it's super simple, right? Nothing crazy going on here. Right here, VPOC. The more day, like I do notice a lot. It doesn't affect the way I trade them, but if the VPOC actually the next day doesn't get tested, so if like one day in between when the actual VPOC gets tested, it tends to be a lot stronger. Versus if it gets tested the day after, you still see resistance, but nothing too crazy a lot of the times. Volume by price. So that's one of the tools we use to read volume, but volume profile, volume bars, book map, footprint chart, all of this can be used to read volume by price. Remember how I talked about, right? Supply has to be supply and demand, has to go with overall sentiment. And then the next thing that has to be in click, right? Has to happen is volume by price, right? For a bounce, I want decreasing volume. For a breakout, I want to see increasing volume on the breakout. And I need to see these two things for the A-plus setups actually come into play. But one way you can actually read, do you have a TAS? Yeah, I used to use a TAS a lot, but they didn't let you actually trade or copy trade. I switched over from a TAS when I started trading prop firms, like last year, 2 years ago, whenever that happened. I went to Quant Tower because I could copy trade all the firms. And not only that, you can copy trade a TAS and prop firms, but the reason I started with Quant Tower is with Quant Tower, you can connect TD Ameritrade to Quant Tower. Yeah, I used to love a TAS 100%. The only reason I got off the TAS is because TD Ameritrade you could link it to Quant Tower, and I could link Quant Tower to all my prop firms, and it was just easy for me to do that. But a TAS is much better than Quant Tower, in my opinion. Much, much better. It's a great platform. It's been around really well. It's super customizable. Looks a lot better, a lot less laggy. And I do think you can copy trade Apex on them. So I honestly been thinking of making the switch back since I can't link my TD Ameritrade account anymore since Schwab bought them out. But volume profile, you can read the volume increasing or decreasing using the histogram. So we pull up into supply, volume decreases. Pull up into supply, volume decreases. That's it, right? We can also use the volume bars, right? As we're determining is volume decreasing right here, decreasing as we're pulling up into supply or demand. You can use any of those things. Remember, in supply and demand with the market sentiment, with the structure, and then volume has to be decreasing for a bounce, increasing for a break. Let's see. Just to set up footprints, figure out charts. Trading view, and they only have a live volume profile. It appears every time I close my phone. Yeah, backtesting is a big issue for a lot of people, and I think it's worth worth the investment because it's not necessary. Don't get me wrong, it's not necessary. You'll just fast track a lot. Like you'll speed up a lot of because a lot of trading is about data collection. I have a lot of the data collected already for you. So if you can kind of base so when I actually come and sit with you, if you have no data, I'm going to base your, take profit, your stop loss, your size, all that kind of stuff off my data. But I still think everybody should back test for themselves as well. But it's not 100% necessary. But yeah, if you want to do it on a TAS, he'll set it up for you, basically, 100%. It's not a crazy setup. It's super, super simple. Is he in here? I think he's gonna set his links for his classes and all that. But yeah, you can just book one with him. We'll set it up if you want to use a task. I recommend it's a great platform. Quantower, a lot of people use it because I guess you get it for free, with your prop firm accounts. And you can get the DOM service on it if you pay for it, which is pretty cool. So you can get a book map on it. I'm not sure if it has book map. Oh yeah. Yeah, exactly, exactly. Which is why I recommend you start. So which is why you can just forward test, I guess. Like if you can't back test, just use my data going on and just forward test to kind of tweak it as it goes. Which is what we'll do together. And then, so again, it's a very simple way to read volume by price. So again, we talked about like three simple things here and like necessary. All of them are super necessary. And as we go on this week, just focus on getting really, really good at just reading these three things and seeing how the market reacts. In the next class, whenever y'all want to do it, or vote for probably Saturday again, we'll put all of this shit together into setups, and like, have this do that, have this do that. When we talk about order flow here in a second, like that will be the triggers for entry, which is for people is the most confusing. VWAP is something I love. Highest tier subscription for trading, so I can use the volume profile candles instead. I'm not sure. I'm not familiar with TradingView at all, so I'm not sure what that entails. But a lot of people use it, so it's great. I think it's a great platform. For charting, sometimes I used to use it. For crypto, I use it for crypto charting. But other than that, I don't have too much experience with this. I'm not even sure what the volume profile candles look like. You talking about the footprint chart candles? $70 a month, probably get anything, any of the other platforms we talked about as well. Oh, okay, yeah. So footprint, I'm not sure. I think the footprint charts on TradingView are a little new, a little bit broken-ish. I'm not sure. That's what I keep hearing. Do you like it? The footprint charts on TradingView? Everybody I talk to says they're a little bit different. The data you get is a little different, isn't it? A little different. How to source the data. Yeah, I agree with that. Because I mean, I Thinkorswim is the data that I would trust over any other data, or any kind of regulated broker. Thinkorswim is, I mean, if I'm comparing data from broker to broker, Thinkorswim will be my like staple, right? And Apex data, Top Step data, all matches wherever they say they actually get their data from. They actually get all matches Thinkorswim. So I'm not sure about TradingView. Okay, yeah. So we'll see about the more. I think it's pretty new, so it's getting better and better as time goes on. Yeah, yeah. So we gotta get the subscription. But VWAP for me and why I absolutely love VWAP. So VWAP is actually a equation, and when I'm talking about institutions, they don't actually use the line. They use like the price level of VWAP, a volume weighted average price. I don't know why I cut out there. It's extremely well respected, and you not only can use it for sentiment. Lucas has a whole section on this. He's going to teach you guys when it's his time, but use it for sentiment, which is what he uses it for. But I love the data I have with VWAP is taken it for a take profit level. That's what I have with it, and it works really, really well a lot of the time, especially if you're going with the overall sentiment and structure and trend of the market. VWAP is a very, very well respected level, price level, just because it's used, and it's not used by retail traders. It's used so greatly by these mostly like proprietary firms that run algos, and even like I don't know, I'm not even sure if it's probably changed a lot since I was kind of familiar with that game, but it's still very heavily used and respected. You can even just tell by looking at like what the level two is looking like at VWAP every single day. Still very well respected. But let's go over recap this before we get into order flow, and order flow will break it down. And not don't worry about when you go over order flow how to use it for entries and exits. Worry about being able to read it, understand what's going on, and then we'll use it for entries and exits when we build these setups. But bid, right? The price a buyer is willing to pay for an asset. Ask is the price a seller is willing to accept for an asset. So obviously, if you're buying something, let's say you're buying a house, you want to pay the cheapest price possible. If you're selling the house, you want to pay or you want them to pay the most expensive price possible. But let's say you're about to get kicked out tomorrow, you need a new place to move in, right? You have to buy a house then right here and right now. So you're willing to pay whatever you want to pay so you're not homeless, right? And that's what market orders are. You're being aggressive, right? Versus limit orders or passive orders, the big guys who buy up all the houses, list it for a price and it just sits there until they sell because they know it will get stolen or sold or what the hell is up? They know it will get sold at some point. I lost my words there. For whatever price they want to do it at. And the limit offers, like usually, like why they're so big, man. Like we only look at the big limit orders. If you were to look at all limit orders, you drive yourself crazy, which is why like I have that filter on Bookmap. Like though, like most players, like big guys, they don't do market orders. They can't because like if you're a big player, like let's say you have like $1 billion account, even $1 million, and you want to like and you put in market orders, like 10% of your offers get filled in at 500. The other 10% will get filled in that, that 10% will move the market down or move the market up. So the other 10% will get filled at a whole different price. Then like, when you're down to the last like bit of your offers going in, it'll get filled at a terrible price. So, like you can't do market orders when you're getting in and out of a huge position. And that's actually something that benefits us a lot because we can kind of look at that. That's a whole SPY trade I took was based off of this, the put squeeze this week and sell it at Gucci. Yeah, exactly. But level two data. So footprint charts and bookmap is what I use. But we'll talk about depth of market, level two, times and sales, all this stuff. So it shows the behind the scenes. It shows the actual like auction, right? It shows the offers hitting the bid and ask. So it shows you who's buying aggressively, who's selling aggressively, right? It shows you the open limit orders. Like if you're an aggressive seller, like let's say, you were in $1 billion of debt and if you don't pay the debt by tomorrow, they kill your family. You'll sell your house for whatever it is, whatever it takes to get that money, right? And that's why they're being aggressive. The same thing with the stock market, just an analogy there. But you get all the open limit orders, which is huge because you see all the big guys because most of them are just doing limit orders. You get all the stop orders. You get to tell stop orders, just take profit orders versus limit orders, like entry orders. You have to gauge the reaction afterwards. We'll talk about that in a second. You get all the quotes. You get the spread, right? Spread is important for options a lot, but when you're trading futures, the spread is pretty much irrelevant, or it is basically irrelevant because it's so tight. But order flow here. So first thing to get into is times and sales, and we're gonna get into like this and why I don't like to use this as much anymore because it's a much better way to read it. You can use this though, but times and sales, right? You get the time right here, price, and you get the size. And the size is 100x on Thinkorswim. But the red is all the offers hitting the bid. Green, you got all the offers hitting the ask, got what price point they're hitting, and you got the time they're hitting. So it gives you all everything you see on the book map, everything is in the footprint chart, and this really ugly thing is coming at you so fast. Yeah, with Rhythmic on our prop firm, if you link it to Quantower, you get access to footprint charts. But if you have to pay for the whole license to Quantower for Bookmap. Same thing with TopStep or Apex. If you have those accounts with their data, you get footprint charts for free for a week. But if you want anything else, you have to pay Quantower for all their shit. Level two, this is the other part of Bookmap, right? You get the passive limit orders, right? So you have the EX is the exchange. Don't worry about that too much. You have the bid buyers at that price, right? Or the buyers, the bid size is the actual size of the bid times 100. Ask sellers at that price. So at this price, sellers 9 times 100. And then the difference in these two is how they actually get the spread. So that's where the spread comes from. And obviously the exchange is not something for futures you have to worry too much about. When you get into options and anything else like that, it matters, but we'll have a whole class on that as well. The difference in between the two is spreads are pretty simple, right? This is all the limit orders. This is all the aggressive orders. Bid ask chart like that. What do you mean? What are we looking for on a bid ask chart? So with the footprint chart, you actually only get this data. You don't get level two data unless you have like the DOM up there, which I do. I'm not sure what you mean by that. You want to be looking at the orders coming. Is there something more we should be seeing? Still not sure what you mean. These are all the aggressive orders that are coming. They're just the market orders basically coming into the market. Yeah, so this again, we're just showing you like what this is what this is showing you. All the market orders, this is all the limit orders coming in. Now you can combine this with the overall sentiment of the market. Like let's say we're coming into I'm not quite sure what your question means if someone wants to elaborate for me. But let's say like for a quick example, we're coming into supply, right? We're coming into supply. Overall sentiment was bearish. You knew you wanted a short, so great volume has died out. Come up into supply, and then you see on the bid here, right, where the sellers are, on the ask, you see, in supply, 5912, you see like 100, sometimes the numbers will go crazy here, and that's what you're really looking at for level two. You see 100 size, which is actually times 100, on this ask size. You see 100 on there, and as we come in, you see 100 offer there, but when you look at the time of sales, you see the aggressive buy offers, which is just the offers hitting the ask, which is the green ones, die out. This is just dead market. I think the screenshot was the market was closed or about to close, so it's dead. But then you see like 1. You see no big buyer stepping up, right? That's just something to notice of. In supply, there's a lot of passive sellers that when we reach supply, there's absolutely no aggressive buyers to fill those sellers. The market will reverse. So I'll show you what I mean by that on Bookmap. It's easier to read. Oh yeah. So basically like this is Bookmap, right? And the footprint charts it's just a different way to look at it, right? It's a much harder way to look at it. Yeah, exactly. So when I'm talking about Bookmap, like I'll show you what you can use to read it. It's just you'll see why it's a lot better. Like nobody wants to look at all this shit. And this is what I used to look at. A lot of people like to look at this shit and still do, but so much if you miss something, you miss something and you're just done. No way you're scrolling down that far. But it is a clear picture though, in my opinion, because With the book map, you have to zoom in, like hover over everything. With this, you see like the exact second and the exact offer at the exact price. Really, really, sometimes it comes in really fast, so it's hard to read. But it like just like the book map, it's pretty obvious when there's a huge like you'll see like let's say we're approaching supply and like there's a 59.12, there was like 100 there, and then we come into 59.12 right here, and there's like 200 aggressive buyers that hit that. I'm not gonna be wanting for that go for that short because it just wiped out all those limit orders, and there's a bunch more aggressive buyers in the way coming in. So when the aggressive bids keep coming, and it's still heavy, I'm not wanting to short anymore. Same thing the book map will give you. But you can use this if you want, 100%. Nothing wrong with that. But this is much easier to read. Relative readable. My time is limited. Yeah. So if your time is limited and you can't be like, have laser focused vision when you're looking at this, you don't want to use it. You have to be very, very, you got to be on it. You got to be on it. You got to be locked in. But with Bookmap, you have some more leniency. You get the green bubbles, the market buy order. So these right here, right? Those are going to be your green bubbles. You get the red bubbles, right? The red offers coming in, and you get the limit orders, which is going to be the size here. So the way you determine if it's ask size or bid size. So where price is currently at 51, if the limit orders are above price, right? These are going to be your sell orders, right? These are going to be ask, right? The ask size. Below price, the buyers, above price, the sellers. So pretty simple. That's how you determine between bid or ask. And that's pretty much it, right? That's pretty much it. So nothing too crazy going on. And then we'll talk about everything else you have to go off on here as well. But the way you can determine, you'll get the order book that tells you the exact size that will match up with this. But the darker it is, again, more visually appealing, way easier way to look at it. Instead of looking at the numbers, you just look at the color. The darker it is, the more orders there are sitting there, right? And then like instead of looking and doing the math, like, okay, there's 200 here. Was there 200 here? You can just look at it. So if a big buyer approaches that level, the limit orders, does it clear it out? Does it wipe out all the offers? If it does, it was more than enough. And if there's still more aggressive bids coming in, you can kind of tell what's going on based off of that. And then if you kind of still see like, we clear this big offer, you see the buyers get smaller and smaller, you see more offers coming in above price and being bid in and in as the buyers are getting smaller, good indication to move on to the other side and look for a reversal. Then the order book here that I was mentioning, right? The number of limit orders. So the same thing here, you'll see the size. I'm not sure I think this is still 100x too, to be honest with you. I think it is. I'm pretty sure everything Thinkorswim when it comes to these offers are 100x. It changes depending on the instrument you're looking at, because like the more volume it is, the more the multiplier is. Like the less volume is, the less the multiplier is. So it changes. But for ES, buy it, I think it's 1000x. ES, I think it's 100x. It changes for all the different ones. But you can zoom into each second, to each tick, to each price level. The time frame for the book map there is no time frame, right? You could zoom in and out, and like that is your time frame. Like saying there's no time frame for the time of the sales. Like a lot of people ask me like, what time frame did I look at book map for? There is no time frame. Yeah, and NQ is the same. It's 100x. But for QQQ, it's 1000x. There's no time frame for level 2 and time to sell. You zoom in and out, like that's it. No time frame. A lot of people don't understand that for some reason. And book those give you the number of orders. But this is how you can use Bookmap to read a relationship with passive buyer and seller. So we talked about kind of when I'm going for a setup, right? Has to be in supply and demand, has to go with the overall structure, has to have volume and price analysis on our side. Now, the next thing is kind of using order flow to really kind of confirm the last confirmation we need to get in. And a lot of entry triggers are to deal with just order flow. So when we're looking at Bookmap, right, you don't want to be staring at Bookmap 24/7 because it's going to cause you to do a bunch of stupid shit and it's going to cause you to go crazy because you'll see orders come in and out of the market like crazy 24/7, not 24/7, but from like 9 a.m. when the market opens to when the market closes. It'll drive you nuts. And I used to do that too. I would be like, I see a huge red circle. I'm like, damn, all right, this is a big seller. Let's short. We have to short. Don't do that, right? Only look when we approach a key level or once we're in a key level. So what you're really looking for, right? You're not looking for everything. You're looking for huge amounts of passive orders. +1 on Bookmap. Just one, especially like at a dead time. Watching the Bookmap when it's dead sucks because it's just so dead, so boring. And you get like one big offer and it takes like 10 minutes for anything else to happen. It kind of can help. Like when you're trading dead volume, dead hours, I like looking at the footprint chart a lot more than the Bookmap, to be honest. That's a little bit more drive you less nuts, but you're looking for aggressive buyers or sellers failing to move price up and down. We'll talk about that in a second. Trap players happen sometimes. And really how you read the relationship on Bookmap is like if price moves up, Price will move up if there's more aggressive buyers and passive sellers and vice versa. That's the relationship you want to read, right? So what absorption really means is, right, so buy sides, aggressive buyers and the passive sellers, the market moves down, right? So sellers are in control. The other side is sell side absorption, which is this right here, aggressive sellers into passive buyers, and the market moves up, buyers in control. So like if it doesn't look perfect, if you're a little confused about it, like is that absorption, is that not absorption? It's probably not absorption. Now, it will look very obvious and it will look very perfect. So like if you're confused about it, don't take it, just move on to the next setup. So it would look like you're looking for those huge amounts of passive sellers. The market pushes into there, and we have not even nearly the amount of buyers that we need to fill to get through this level. The market starts selling off, right? And we could come back up and fill these offers, but what happens as we sell off, right? We fill a huge buy offer and price moves beneath it, right? So not only do we have more passive sellers and buyers, we passive sellers and aggressive buyers, but we also have more aggressive sellers and passive buyers. So every time we fill a sell offer, we move below, below, below. We even come back up and retest up here, right? There's a passive seller, right? The buyers get smaller, don't clear the passive sellers, the market keeps moving down. So just think about this right now and don't really think about understanding the how to use these for entries. We'll talk about that. Just think about it just for reading the relationship, engaging the biases, gauging the market, which is why like going on to this week. What if the order is open for hours through the day? Will it have a chance of getting hit to go back in the other direction? Yeah, so if orders are open for a long, long time, they will like most likely get hit. A great example would be like on Friday, especially if there's like news, they'll cancel the order out when news is about to come out. They'll rebid it right away, so they'll mostly always likely get hit. Now, if that's the case, right? If an order gets filled and you can't like, let's just say there's a huge order here and you're looking for like you don't know what's going to happen once it hits that offer, right? You have to wait to see what actually happens. Let's say we hit that offer and we don't fully fill it like this. You don't fully fill it, right? More passive sellers and aggressive buyers, the market will then move down. Let's say we hit that offer and we have a huge aggressive bid there that not only takes that out, but also moves price above, right? That buyers are in control there. Let's say we fully fill that offer and price starts to consolidate and we see buyers getting smaller and smaller and more bids come in above price, more and more aggressive bids while buyers are getting smaller and smaller and smaller. So you can't just, those offers will get hit, but what happens as it's getting hit, after it gets hit, and the overall, structure and the overall story. Let's say that big offer is at liquidity. Let's say that big offer is in supply. Let's say that big offer is in a random location, right? That also matters. So just because that an offer is there and it's been there for a couple hours, I mean you want to short just when it hits it, you have to kind of go with the overall story. You have to see what happens once it hits it. You have to see what happens as we're going into that offer. A bunch of other things will come into play. But yes, because the offer is there for a longer amount of time, it's there for hours, it gets hit every single time. Most of the time it will get hit. It can be used as a great magnet too. Even if it doesn't get hit that day, you'll probably see that same offer the next day. It'll come back. It'll come back because that, like, if you just think about it, like this is like this, investing 101. Like these big guys have fair price levels. Kind of Lucas talks about this when he's going for his longer term positions. Like they have these fair price levels where they want to get filled, no matter what, or get filled, get in, get out. Like this is the only price level they'll do it at. So they'll leave their offer there because they know it's going to get hit at some point. They don't care when. They're not trying to make money fast. Like they want to get in or out here no matter what. So they'll leave their offer there for as long as possible. And that's why they usually end up getting hit. But great sign of some absorption here. Just remember, they're telling who is in control. We do see weak buyers, right? But after that, we see an insane weak aggressive buyers. But after that, we see an insane. This is what was happening a lot during that SPY squeeze. We see an insane amount of aggressive sellers, but right beneath price, we see a huge passive buyer. Passive buyer still there even after all these sellers try. And then whenever sellers start to die out, price kind of moves up. So just understanding how to read this just by telling, you can just tell who's kind of in control at a certain moment. Don't worry about using these for entries. Like, so obviously you can tell who's in control. Not only are we seeing aggressive sellers get filled and price go above, but we're also seeing, aggressive buyers fill passive sellers and price go above. But we're also seeing aggressive sellers fail to move price below, right? Like you see, not that aggressive of buyers that price moves up, then you see crazy aggressive sellers and price doesn't move down, right? Because the passive participants are in the way. Now, when you're looking at footprint chart, this might look a little bit like, you see a nice like 500 delta candle move price up. You get a neutral candle coming in here with like negative 3,000 delta. Yeah, price does not move down. You look at the book map. Okay, you see all these passive offers still there, and you might be thinking to yourself, if this was in supply, you don't want to short. You might be thinking to yourself, if this was like pop off the or if we broke here, so you broke demand or supply, came back and retested it, and you see this, perfect for a retest into a long, right? We'll talk about how these can be used as entry triggers, but remember, if you're already kind of picking up how you're using this to identify the relationship of what's actually going on in the market, That's all you really need to know for now, because when you start building the setups, it'll be a lot easier if you understand that aspect of it. The bookmap. Bookmap is awesome. I really do enjoy it. I'll have it on my, I'll try to keep it on my lives open this week for y'all as much as possible instead of my other charts. But if aggressive buyers are filling passive orders, this is kind of how you tell who's in control, right? I just mentioned that a little bit in the previous slide. So aggressive buyers are filling passive offers and being rewarded and prices moving up with them. They're in control, right? We're seeing all these offers, all these passive sellers get filled and price goes up, 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 and up and up. After seeing this and we have this little bit of a retracement, I still wouldn't be confident in the shorts because of this. Yeah, so I mentioned time frame on Bookmap is irrelevant. There is no time frame since you can zoom in and out. There's no time frame for level 2 and times and sales. It's just active data. There's no such thing as a time frame for Bookmap. A lot of people don't understand that part. So there's no time frame. But control again. So an easy way to tell, right? I mean, you see from this, it'll look super simple. Happened a lot this week, kind of, could have gotten you, stopped you from taking any short, especially on NQ. We would pump up, fill sellers, price will go below, pump up, fill sellers, price will hold above. And I would not want to short this until I see something from sellers, an offer maybe from buyers, fill and hold above, which you haven't seen. So this will kind of stop you from going short just by looking at this. You're seeing aggressive buyers clearly in control. Even after this little retracement, right, a clear little trend up, down, the biggest seller rise was at the bottom and nothing happened. Price didn't move down, continue to go up, continue to fill these aggressive or passive sellers and price move up again. So clear way of just telling the sentiment who's in control just by looking at Bookmap. And this is great because you can zoom in and you can kind of tell who's in control in like a single 5-minute candle, right? You can zoom out and kind of tell who's in control the whole hour can, like the whole hourly time frame. So that's why the Bookmap is really, really key because you can really, really zoom in and kind of get your entries as tight as possible just by doing that. Leftover orders on Bookmap, something we're going to use a lot too, which is pretty key. So basically what we saw here, right? If buyers and sellers fail to fill all the passive orders, especially if it's in supply and demand, the market will reverse, right? You can use it on Bookmap, you can use it on level 2, whatever it is. If there's more passive buyers and aggressive sellers, the market will move up, right? And vice versa. So good example here. And this is a lot of times how it would look. Price pushes up into a huge wave of passive sellers or the bottom, whatever it is. And when it fills versus when it looks like this versus when it looks like this, the two big differences you're seeing, right, is when you push up and hit this, there's still a bunch of passive orders left over, right? You still have that line. It does get canceled afterwards when price starts moving down, but it's still there, meaning that if market kept getting bought into, you see the orders would keep coming back in and out, right? Versus kind of when we push down here, yeah, we retraced, but this actually ended up continuing going the downside because we filled all the offers. All the offers got filled, right? And then when price goes back down, it'll have no issue just ripping past that level versus not all the offers here got filled, right? As you can kind of tell the leftover offer. So if we were to push back up here, we need more aggressive buying to kind of rip through here. And even kind of just looking at beforehand, right? What was going on for the sellers? We were filling all these passive buyers and holding below price. Huge offer down here. This one has been here for a while. Got filled. And then when we got back up to like the 4405s, we didn't fill all the offers. Market shot down. We got back down to 43.90. Filled this offer. So if I was, in this position, I wouldn't really look to get out just yet, unless it's, where my TP was, because there's nothing else there. So if the market just has a little bit more of a move down here, it'll rip past because it got hit by a super aggressive seller. It cleared all the support. So it could continue to fall off like that. So that's what I mean by leftover orders. Like once we hit a big level, is there orders left over? Is there nothing left over? If there's nothing left over, price will continue to fall. Might consolidate there for a while. If this offer is left over, a good chance it won't break above because we need to see more aggressive buyers coming in and actually rip past that level. So a good indication, a good read there. And I feel like this is awesome right here. If the limit orders match the supply and demand, right? You know why these zones are important. It gets partially filled. This is something you're looking for. So you look at your supply and demand levels. You look at Bookmap, like, do we have a huge offer there? Does it match my supply and demand? All right, I'm looking for orders to get partially filled there. I'm looking for passive sellers in this instance to overtake the buyers for a move down. The delta you're looking for here is going to be the ask volume. So color of the bubble will determine, obviously, you want to zoom in for this as much as setups. We'll use this for setups as well. It's possible. The volume will give you the delta, basically, of that specific bubble, right? But because these orders could be stop loss, take profit. Yes, but I don't mess with those. I don't mess with those indicators. You can if you want to. I have not found any use for them for me personally. You can if you want to, but what I like to do is just gauge the relationship and just kind of the aftermath of what happens for it to be stop orders or take profit orders or anything like that. Because let's say you get, you have a huge offer up here, and this is someone's take profit order. So it's not someone just, selling or shorting the market, but it's a take profit order. Usually take profit orders will get fully filled and the market will kind of then move above. So it'll look kind of something like this, right? This is a take profit order for shorts. It'll get fully filled. The market will continue to move down versus this someone getting in long, right? You have to gauge the reaction afterwards. You definitely, I don't need them for my setups. And I've looked at all of them. I've tried all of them, especially when you're messing around. You have the dark pool orders. You have all these crazy things that, you can kind of throw into there that you can use if you want to. And it just gets crazy complicated at that point. And, I have the data I have. And if it's not broke, I'm not looking to really fix it. So there's no reason for me to kind of go in and add all these kind of things. And it doesn't, I've tried looking at them too. And it doesn't really, if you're trading solely off like the book map and solely off offers like that, it would be mostly beneficial if you're trying to do like some high frequency type of shit. And like if that's what you want to trade, then like you could throw in the iceberg in there, the huge block orders, huge stop orders. But for me, I kind of don't like to do that. I kind of just like to focus on the huge offers in the market and gauge what happens after they're filled or after they're hit or what happens as we're filling them, like exactly to see what kind of offer it is. Too old for higher time frame. They work really well, and those are the people I know they're successful with using those. They're scalping like ticks. They're scalping very small amounts of points, but yes, it can help for some types of strategies for sure. So the delta will be the actual volume. But again, like when I'm looking for delta, I want to know the delta of the candle a lot of the times, right? So if I'm looking at a specific bubble, I don't know like what time frame that is, what candle is. I'll give you the specific time it came in, which is why looking at the footprint charts in conjunction for me help out for some setups. You don't need both bookmap and footprint charts. That will limit you to what setups you can and cannot take. But we'll hop into the footprint charts though. We'll get into it. So it's gonna be, you get the bid ask offers, you get the imbalances, which are key for me for some setups, and you also get the volume price per tick, which for me I absolutely love, and the delta, right? The delta is nice. So looking for a similar thing, right? Big positive negative delta. Trap participants will give you the same kind of look. Interest and higher at lower prices, kind of the volume by price analysis that we saw. Who's calling me? Scam call. So footprint charts will show us something very, very similar, right? So we'll get the candlestick body, right? So we get the body and you get the wicks. You also notice the high, close, open, low. Pretty similar thing. So you don't need to look at a candlestick. You have footprint charts open. But on the left-hand side, same thing as level 2 we were talking about. You get all those offers that are hitting the bid. The right-hand side, you get all those offers that are hitting the ask, right? So you get those aggressive buyers, those aggressive sellers. It's all market orders, right? All market orders. So you kind of tell how this is like a much better visual representation of just the times and sales because like you'll be left over on there. You can scroll back, you can see it. It's a very easy representation. Instead of having to add up all the numbers, it'll just give it to you per tick. Not only that, it gives you the delta, it'll give you the difference of everything. Super, super useful, right? And the volume per candle, super useful, right? You need to know, like, because when you're looking at the volume profile, the volume bars, you have to wait for it to close. And like this will give it to you in real time. Like you're not like squinting to look at the numbers. It's a much better and easier way to read volume by price, in my opinion. One of my favorite tools to read volume by price when I'm executing for sure. But you can kind of use it to infer the same thing as the book map, right? You see it huge amounts of positive delta, yet price does not move up. What obviously happened then? Like why does not price not move up, right? Because there's a bunch of passive sellers absorbing all these offers. So then price moves down. You kind of infer it, right? So absorption for me is I have it broken down to something that works out a lot of the time. So the New York Open, I'm looking for ES 3,000 plus, and this is a setup I use. I'll just break it down. In supply, obviously with the structure, with volume by price, I'm looking for price to have 3 consolidation candles. See volume dies out from like 44 to 39, 25, 26. 3 consolidation candles with equal high, and the total delta has to be over 3K. That for me is good absorption. And then NQ is half of that really. And this is just for the New York Open. Times will change, averages will change when there's less in-depth volume. But just seeing 1,000, price does not move up. Or price kind of does move up, but most of the buyers are up here. 2,000, price moves down a little bit. 1,000, price moves down. And then you have negative 2,000, price moves down. Negative 3,000, price moves down. So you can obviously tell what's happening here just by looking at the delta. And then if you see and you can also tell like sellers and buyers getting weak, just like the book map, right? You see price moving down and we have negative. Oh, no, we're good. You see price moving down and you have negative 930 delta and price continues to move down and it goes to negative 59, negative 58. And then the next candle opens and has 2.8 positive and the market just flies up. So You can use it to just tell buyers and sellers that are getting weaker, or buyers getting stronger, or sellers like, going from 900 to 15. And this was happening in demand. Great an indication, great confidence for going long, right? You see strong buyers in demand, they completely, or sellers in demand, they completely stop selling, and then you see a huge buyer come in right after. Slide for the yeah, or it's not complicated, right? It's not crazy. It's nothing like it's not extreme. It's not difficult. It's just breaking down individually. Then with this week, what I want y'all to do is literally just have whatever you use for order flow opened up and just watch it. Just watch it with the market. Watch it what happens, and you have like a much better understanding. Like, oh, like this is why the market moved up from here. Like the seller stopped. Like, oh, there was crazy absorption, so the market moved down. And then the next class will literally just put everything we talked about here and give you the exact numbers that you're looking for the setups. Like three candles, I have this number, and I want to go short. If that happens, I'm in short. Yeah. I am not sure about NinjaTrader footprint charts. I know they have them. So if they have them, and as long as you get the data from a reliable source, then yeah. I'm not sure how they look, how you can get them to look. Yeah, so I'm not sure about that. I don't use NinjaTrader. It's paid. No, I have the same issue sometimes, Peter. You just have to zoom in. You just have to zoom in really deep and look at it and like be moving it around. But yeah, you have to zoom in. NinjaTrader, no, he doesn't use NinjaTrader. You can get it. I've seen them. Yeah, I've seen them on NinjaTrader. I know you can get them. I would just try to YouTube it maybe, but none of us use NinjaTrader. But you can get it. Move with price. Wait, really? On Quantile, Craig? You might have a setting messed up then. I do not have that issue. It moved. You probably have something locked to it. I'll look at my settings because I shouldn't do that. Mine isn't locked. It's definitely a setting you have flicked on or off. You'll have to figure that one out. But yeah, mine doesn't move with price. But yeah, with even like last week, it's Friday, like when having those crazy ranges, I was having issues with the footprint chart because the ranges are so wide. I had to zoom in like crazy, I wouldn't be able to tell. But you just have to zoom in and just move it, right? Move it, adjust it with price, and just zoom in with it, and just keep actively moving it up and down. Sometimes I have to do that with NQ. I have to do that a lot. Yes, rarely. Last week was just crazy. I had to do it. But look at the current price, active candle and views. Yeah. Yeah, you could turn it sideways, your monitor sideways. That's honestly not a bad idea. Not a bad idea there. I have like a really big monitor, I guess, compared to most monitors, so I don't have to do that. One that I use, but it would be better if I turned mine sideways. I wouldn't have to actually move it. So not a bad idea there. Not a bad idea. Right click price scale and choose manual. Yeah, there you go. Yeah, I knew there was a setting for it. Manual means you just drag it around, and I have to drag it around constantly. Yes, I do it all the time. So got to get comfortable doing that. And another awesome thing the footprint chart is for, which makes it easier to read. You can tell this in the book map as well, but footprint charts make it easier. Trap players per tick, because then you'll see the exact offer coming in at the exact tick, right? Not a trap player, but you see what I mean here. This is where the imbalances will come from. The imbalances, actually, we're going to start talking about. We'll start frozen. We're back. The imbalance is something we'll talk about also a lot during the setups, because there is a couple things. I thought it'd be better to combine them with the setups because it'll make a lot more sense when you go through them. Because what imbalances are is confusing, but how to use them is not confusing, if that makes sense. Is Quantile free? You get free footprint charts. You get a week's worth of data. So like you can go back a week worth of data of footprint charts for free if you have a prop firm like Top Step or Apex that you link to it. So yes, you can get it for free. Yeah, Apex. You just with Rhythmic, you just connect that to sign in with the Quantile connection. You get these for free. So it's pretty beneficial here. But the dead volume, they're dying out, right? You get to see, the wicks of the candle. Like every time you see a candle wick into demand, there's no volume. Great indication to go the other way, right? Less interest at that price. Price does not want to be traded down there. Great indication. Price will then make its way back up. So footprint charts are awesome for reading volume, right? For reading volume by price. It's a super easy way to do that. Aggressive follow through. This is what the imbalances are for, are key. This is one of the setups I like a lot, right? You see, like when we're bouncing off supply or demand, right? And since you're off supply, you see negative 1.3K, negative 3.3K, and then price flies down. Right? These are the same thing as sellers getting rewarded on the book map. You're seeing that negative delta and price is falling down. Price making an imbalance. This is something that we'll use as an entry trigger, right? A tap of the imbalance for entry triggers. But what these imbalances are, they're a divergence in either just bid offers or just ask offers. Right here, you can obviously see zero on the other side, and like a lot of people, this is kind of hard to explain like this because it just what they are won't make a lot of sense. Don't worry about if you're looking for a sell imbalance, it's not based off of the relationship between the bid and the ask. It's just based off the relationship for this instance of sell imbalance off the offer that hit the bid, the tick that came after that, and the tick that came after that, the tick that came after that. Not based off of the offer and bid relationship. What it is again is confusing. And once you look, it makes sense to me because I like it's like shit that you would like learn in school. It doesn't matter really what it is. It's a divergence in price, and whenever these imbalances are made and they're come back in, they act as very strong support resistance, especially when they're tested with dead volume. It's a great entry trigger that I use. It's a great indication for continuations. We'll talk about the different types of imbalances, reversal imbalances, continuation imbalances for the setups, different types. Because sometimes you'll see a sell like a buy imbalance at the top of the candle, price would instantly reverse, reversal imbalance. Sometimes you'll see an imbalance be made and price flies down past it, like a continuation imbalance. Continuation imbalances are where you want to look to kind of follow the trend along. Reversal imbalances are where you want to look for the other side. So there's a bunch of different things you can do with imbalances, which is why I'm going to kind of talk about most of them during the setups because if instead of explaining it to you and what it really is, which won't really help you use it to make money, I'd rather just show you how to use it because that makes a lot more sense, to be honest. They still kind of confuse, like the terms behind them are still kind of confusing even to me. Just you'll see what I'm talking about. We'll just kind of tell you how to use them instead. But the absorption plus aggressive follow through is key. Like you just using this. Like what I want you to do this weekend is just have this up and just look at it. Like it'll make a lot more sense to you now that you know what you're looking for, like what it means. So just looking at a bunch of numbers, like instead of just looking at candlesticks, like oh we made a high, we just sold off. Like be like oh we made a high here with 8,000 positive delta. Yeah, there's no volume on top of the wick. Price did not move up. 8,000 delta is a lot. Price didn't move up. Next candle, right, we had negative 2,000 delta, price moved down. 3,000 delta, price moved down. Negative 2,000 delta, price moved down. 4,000 delta, price moved down. Then we have positive 1K, positive 1K, positive 5K. Yeah, price is still moving down, right? So, it's a great way to just read who's in control, what's going on, what's happening in the market. Instead of just kind of looking at candlesticks and being like, oh, up, down. You can kind of see what's actually happening. Is it move up strong? Is it move down strong? Like, seeing 8,000 delta here, price doesn't really move up, get into a sell imbalance. Good indication. Great indication.